welcome everyone, and thank you for joining our Thursday webinar. My name is Conor Kilcoyne, and I'm going to be your host today. And today we're going to be discussing GetGround's all-in-one investment platform, where you can find, structure, finance, and sell your investment through one platform. I'm joined today by Eric Bagger, who's an account manager who works on the limited company team. So he'll be discussing structuring your investment. I'm joined as well by Scott Dixon, our property consulting lead, who's going to help discuss sourcing options and finding your next property investment. And lastly, I'm joined by Andrew Masai, senior mortgage consultant, who's going to help with financing and sourcing the best mortgage for you. So before we kind of crack on, I'm going to explain a little bit about who we are and basically where GetGround have come from. And GetGround's been around for 5 years now, so we've had 5 years of growth. And we've over £1.5 billion of property on our platform, with over 7,000 limited companies. We've over 20,000 active customers and a database of over 80,000 property investors. A network of over 1,500 partners, including lenders, mortgage brokers, property agents, accountants, and tax specialists. And then as a group, we have over 85 hires actually, with offices worldwide. So we've got our headquarters in the UK. I'm sat here in Hammersmith in London, and we're also based in Hong Kong and in Singapore. So really depending on where you're logging in from, in some cases what language you speak, time zones, etc., we can always accommodate and we can always facilitate. What's going to be happening today? So we've a pretty jam-packed agenda for you, which is great. Eric is going to, as I said, talk you through our limited company product and discuss structuring and managing your investment. Scott Dixon is going to be helping discuss or finding your next buy-to-let investment. And lastly, Andrew Masai is going to give you an update on mortgage financing, including details on our new exclusive share purchase product. So what is exactly that we do, or what do we offer here at GetGround? Well, you can find, finance, manage, and sell your UK property investment all in one place. And today, in more depth, we're going to break down our 4 products. But as kind of a high-level overview of what's going to be discussed today, we're going to talk about our GG company product, where you can get tax efficient and leave the admin to us and set up a limited company. Our GG mortgage product, where we have competitive rates in as little as 1 month. You can unlock funds easily from UK or abroad. Our GG search product, where you can purchase high-yield vetted UK buy-to-let property. And lastly, our GG sell product, where you can sell your property tenanted and to a database of over 100,000 investors. So how do we do this? It's a pretty simple, hassle-free process for all investors. So you can define your strategy. So chat through your investment goals and budget with your dedicated property consultant. You select your investment. So review opportunities presented to you, choose the investment that suits you and reserve it. Unlock financing. So get your mortgage fast with access to a wide range of lenders with our competitive mortgage offering. You set up your company, you set up your limited company. So get tax efficient with a GG limited company. Easy open business account. So we set up a business account for all your property expenses as well. Prep all your legal docs and do your tax returns. You cruise to completion. So our sales progression team will liaise with your seller and third-party agents to ensure you get to exchange and completion on time. And lastly, ongoing management of that company and of that investment. So we'll take care of all the accounting, tax return, and admin work, ensuring a hands-off approach for you. So as I said, I'm going to hand over now to Eric Bagger, one of our account managers here at GetGround, who's going to talk you through structuring and managing your investment.
Great. Thanks for that introduction, Conor. And like Conor mentioned, everyone, hello, I'm Eric. I'm one of the account managers here at GetGround. So primarily for this section, we're going to discuss what it entails to invest in a buy-to-let investment via a company structure and where exactly GetGround actually fits into the puzzle there. What I'll firstly do is just give you a bit of an update on the process that we like to follow. So the first being an initial fact find. We appreciate that everyone's investment is obviously tailored to their specific requirements and needs. So here we can put a face to the name, we can understand what your situation currently looks like and what the priorities and objectives are going forward. So from that, it actually allows us to get a better understanding of what structure would be suited for you. And from there, you can actually start going through and starting your company setup via the onboarding on our platform.
Also, by the way, I'm just going to mention that we do have a Q&A box set up. So if anyone has any questions throughout, please do input your questions in the Q&A box. And at the end, we will try and get to as many of these questions as possible. So again, we have a Q&A box there set up. So if anyone has any questions throughout, please input them into the box and we'll get to them at the end. Thank you.
Great. Thanks for clarifying that, Connor. So in terms of the setup process, it's a very easy registration and onboarding that typically takes around 20 minutes for the individual, where you can provide details around your property purchase, how you'd like the structure of the company to look, and also additional aspects around your solicitor details, for example. Like I said, that takes around 20 to 25 minutes. And from GetGround side, what we can do is we can set up and incorporate the company, provide things like all of the legal documentation and the business account in typically around 3 to 4 working days. So it's a very swift process. And GetGround service does not actually stop there. GetGround works to facilitate a lot of the ongoing services to keep the company up and running. Things like the preparation and filing of the company accounts and tax returns, in addition to things like the secretarial services. But I think the most unique and valuable aspect of GetGround is our online portal. So this is what you'll have access to after you set up the company, providing you details around the company as a whole, so details of the company, providing you with access to request changes to the structure if you would like over time, and also detailed analytics into the cash flow of each investment, allowing you to have crystal clear clarity into what costs you're having to bear and how that compares to the revenue. Because our goal is to maximize your profitability at every turn. So obviously you all want to know, why should you actually use a limited company? Where do the benefits come into play? I think without a doubt, the top of everyone's list is always the tax. So I'll get to that point in just a second, as it is the next slide, but we'll go through some of the other benefits while we're here. So the other aspect is around liability protection. So it's worth noting that each company that GetGround sets up, we set it up to act as its own legal entity. What that ensures is there is actually a legal barrier between yourself and the investment. So under the context of company ownership, you're merely an investor in the business and not a personal owner of the property, meaning it's much more tricky for a tenant to pursue litigation against either you or any other shareholders in the business. In addition to this, we have the aspect of buying and selling property easily. So this is actually relating to the flexible share of the company. And what it ensures is that you can very easily sell off or buy back from other existing shareholders. The key point here is that you have a huge amount of flexibility on how you want to shape the ownership of your investment, not only for this current point in time, but also going forward as well. So this is actually something that plays into the role of inheritance planning quite nicely. I see with a lot of my clients that they invest in these buy-to-let properties with the potential intention to hand it down to either their children or to any beneficiary. But of course, they want to do this in the most tax-efficient manner possible. The process that typically follows is onboarding that beneficiary to your company if they're not there already, and actually gifting and transferring the equity over to that beneficiary. The key consideration here is that you can shift over the ownership to them and then go about fulfilling the 7-year rule. The 7-year rule being the period in which you have to gift an asset and fulfill that 7-year period to entirely mitigate the inheritance tax that your beneficiary would have to pay. And because you have the option of gifting incrementally, you have a lot more control than if you were gifting under your personal name, where you have no option but to gift the entire property in one go. In addition to this, we also have the mortgages. So it's worth noting that under the company structure, there are a few slight differences. I would say the most significant here being that when you invest through a company, the lender does not only look at you as an individual. So they will look at the shareholders and do their due diligence. However, they also weigh that up against the property in question. So they look at the fair market value of the property, and of course, they want to know what the projected monthly rental income of that property is. That allows them to determine that that rental income is high enough to meet the payments required by you, and essentially it takes some of the pressure off the individual as a whole and puts it on the property in question, typically leading to higher success rates. So the next aspect is around the tax. And what we'll do is we'll go through this table, and the easiest way for you all to break this down is if we consider the table as the life cycle of the property investment. So the first row is when you're actually purchasing the property, the middle two rows when you're holding the property within the company, and the last two when you come to exit. So what we'll do is we'll start at the purchase stage and make our way down. I would say when you're purchasing the property, this is typically where the fewest benefits are seen. You are still liable to pay stamp duty, land tax, whether that's under personal or company ownership. So there are minimal differences there. But the main advantages start to come when you actually hold the property within the company. The first being, if you are using a mortgage, you can deduct 100% of the mortgage interest off the UK tax liability for the company prior to paying tax. So you can actually take the full amount of that interest and use it to minimize the pot of money that your company is being taxed on. You compare this to personal ownership, you can only deduct at most 20%. So there's a marked increase on the company side there. If we look at the other aspect, let's say that the company has been set up, your property is now held within that company. And now you have a tenant living at the property itself. Rental income is being generated. And what would happen is that rental income would be deposited into the business account. And it's worth noting, there is tax applied on the rental income, but instead of this being income tax, as it would be under your personal name, which could be as high as 40 or 45%, it's going to be corporation tax here. And at least for the standalone companies, the majority of the time, the corporation tax payable here is 19%, so the lowest possible rate. And it's worth noting that 90% is primarily paid on the profit itself, as the running costs and the mortgage interest are all deductible expenses. Of course, that means you've got the funds sitting in the business account now, and you need to be able to draw those funds out into your personal name to fully utilize them. So this can either be done through dividends or through what we call the owner loan agreement, which is a legal document that GetGround will structure for you when we're setting up the company. Simply meaning that any initial capital that you've provided to the company needs to be repaid back to yourself. As that is classed as a debt repayment, there is zero tax attached to that amount when it's transferred from the company to yourself. Typically with a mortgage purchase, that will include things like your property sourcing fees, your deposit, your stamp duty, land tax, and any solicitor and potentially any broker fees as well. The last two aspects are around the sales stage. One of the most valuable aspects, as I see it, through buying through a company, is that you have the option of selling the entire company structure as a whole when you come to exit. The reason this is really advantageous is because of the two benefits I'm going to detail. The first is if you sell the entire company structure, the new buyer doesn't have to pay the full stamp duty, land tax. They only have to pay the stamp duty reserve tax, which for your reference is 0.5%. As a result, that allows you to gain a price advantage by increasing the sale price of your property to maybe not match the stamp duty, land tax, but just be a bit below, allowing you to gain an increase in your net profit and to also incentivize the new investor as well. In addition to this, we also have a reduction around the capital gains tax. So for reference, under your personal name, if you're a basic rate taxpayer, you're likely to pay 18% or 28% in a higher rate of tax. Compare this to selling a company through a way of shares. That capital gains tax is actually reduced to either 10 or 20%. So regardless of which bracket you fall under, you have a full 8% reduction on the gain, which if there's been a significant amount of capital growth, could be a huge amount of money indeed. So just to clarify, we do have two types of company structures that we offer. We firstly have the standalone limited company, and then we have the holding company as subsidiary model. What I would say is that for the majority of investors, I see the standalone company being the most advantageous. You get the most protection in terms of liability, not only on the personal self, but you also have protection for your other assets, because each standalone company is what we call legally ring-fenced. In addition to that, you can help minimize any potential rise in corporation tax rates. However, the holding company can be beneficial for individuals who have perhaps a slightly larger portfolio and would like some flexibility around cash flow. The reason being, if you were to sell a subsidiary company, the funds of that sale could be held within the holding company for reinvestment. It is worth noting with the holding company, you are potentially likely to pay a higher rate of corporation tax as you've got more properties under the holding company. However, you can offset the subsidiaries, you can offset the losses of some subsidiaries against the gains of the others. So there is a way of mitigating this. So how do you know which structure is best? And this is why it's so crucial that we do that initial fact find, because every user journey, every investment journey through a company is going to be tailored and specific to your current circumstance. So we can go through the important questions for you to understand, is company structure right for you? And which company structure should you utilize for the majority of advantages? So I'd love to answer any questions that you guys have. So please feel free to book in with me. The last slide here is just around the pricing and then what's actually involved there. So to give you an idea, we have a one-time setup fee, and then that is coupled with an ongoing subscription fee. So for reference, the one-time setup fee for non-UK residents is £579 plus VAT. And for UK residents, it's £249 plus VAT. That will include the entire setup of forming and structuring the company, as I mentioned, with the legal documents in place and the business account, providing you that whole framework. And the ongoing subscription that we charge, which is £21.98 per month plus VAT, that includes all the preparation and filing for the company's accounts and tax returns, in addition to things like the secretarial services, dividend administration, and also managing all of the posts for the company as well. The last 2 points to mention from me is that one-time setup fee is only payable on the first 2 companies. So if you are thinking about multiple companies and scaling that portfolio, that is absolutely going to be viable with GetGround. The final point is that we are actually onboarding existing stock companies now. So if you do have an existing SPV company used for property investment, we might be able to have a conversation to assume some of those ongoing services and really reduce any accountancy and tax costs that you may have. But that is all the information from me. And now I'm going to hand over to my colleague, Scott, to talk you through our property sourcing.
Brilliant. Thanks, Eric. Really, really good. So as Eric said there, my name is Scott Dixon. I'm one of the lead property consultants here at GetGround. So really the structure in which that we work on here is very much on a model where really no one fits all. It's very much a tailored service for any one singular investor that we work with. In terms of really sort of structuring today and what to go through today is very much skimming the surface of what me and the team do when working with any particular investors that we're working with. But it's just to give you a bit of an insight. Certainly then, any sort of questions at the end, feel free to put in the Q&A and I'll go through today. If not, get yourself booked in and we'll go through full meetings about this as well. But we'll, in terms of the first sort of initial point there. So whenever looking to work with any particular investor, the key steps really to get things really started up is understanding exactly what the plan is. As I mentioned there, it's not a one size fits all. So what we'll want to do at the beginning of any process with any investor is to understand exactly what we need to achieve and how we achieve that. So there's 3 main cornerstones when we look to make any sort of return within property investment. You'll see on the screen there, these are capital growth, rental income, and equity. Now, when we look at the ability of getting capital growth, we're really trying to find the areas in which that we can find the best value when it comes to actually seeing growth on the value, money being spent, and key regeneration zones across the UK, and areas where we can see are heavily targeted. Rental income, we're looking to find properties that we can get not so much just a good yield, but consistency when it comes to the ability of actually letting that out and seeing that consistent return over and over again, which allows us to get to those positions and hit our goals. And then lastly, which is equity. And I think a lot of people forget about this idea of equity. And this is where a lot of people typically fall short. They'll find themselves going on Rightmove and Zoopla thinking, oh, I'll just find a property myself and that'll be great. Now, the reason that people utilize people like ourselves here at GetGround is because we have this ability of getting pre-negotiated deals. In Element, it's a position of getting a bulk level of property because we have that power to take on multiple assets or multiple opportunities. Or actually what we have is a position where we can say to a seller or a distressed vendor, we have X number of investors that fit your property perfectly. So what we can do is we can get a seller in there very, very quickly and get a buyer moved very, very streamlined through that to get the property secured, sorted, and moved on very, very quickly. What we then want to start looking at is then starting to build our foundation of a portfolio. When we look to buy property, I think a lot of people really want to jump in. They want to, it's very exciting. I want to buy a property really quickly. I want to get it sorted, start getting a return, start seeing money. What we need to focus on firstly is actually building up the foundations of our portfolio. There's four main cornerstones when it comes to building your foundation. That is your strategy, your finance, your tax, and then the property itself. And what you'll notice coming from today, all four of those cornerstones are what we're here to provide and to do for you through every step when it comes to actually buying your investment property. So when it comes to the strategy aspect, that will be with someone like myself or one of the members of my team. But what we'd like to do is sit you and take you through a full strategy planning session to understand what you need from the property, what you actually need to be achieving from that investment. Are you more rental income based? Do you want more capital growth? Are you looking to buy one property to secure your future? Are you looking to buy property, remortgage, reinvest, and buy multiple assets over the next 10, 15, 20 years? We'll then put you in touch with our finance team, which we'll move on to shortly when Andrew jumps on. Already touching there a bit on the tax side there in terms of setting up the right full vessel when it comes to buying the property. And then lastly, I come back into the position of actually then providing and sourcing the right property to get you from where you are to then put you into that position of getting the right kickstart into your investment. Now, of course, within that, we will take you from start to finish with the property itself. That comes from, again, the sourcing of the property, taking you all the way through to exchange and then all the way through to completion, and then the ongoing aftercare when it comes to running your business, running your company, making sure your investment is consistently working. And that's really something that we do here at GetGround that I think really gives us that slight edge in this market, that we are here to do every single step and really provide that all-in-one platform for every single aspect of buying your investment property. That includes progression teams, mortgaging, solicitors, insurance brokers, putting in touch with the right agents in terms of lettings management to bring that full cycle for you. And the key to look at when we look at the idea of getting that right strategy and getting that right property is understanding where to invest. Now, there's no wrong place to buy property. And really speaking, if you buy an investment property, eventually you're going to make a level of return because property as a market always trends upwards. What we want to try and do is get the best kickstart within that, again, to fit that really to the strategy you're looking to implement. When we look at locations, there's four main types of location you're going to find across the industry. That's established, emerging, mid, and regressed markets. When we talk about emerging markets, we're talking about regions where we can see low entry points for that newer investor, 30 to 40,000 pounds looking to invest, really wanted to get a real kickstart into growing a portfolio. Established and mid markets, these real key zones now in the UK, places like Birmingham, Manchester, Sheffield, Liverpool, these kind of regions where we can start to see a real good level of growth. There's real solid plans in place. And then regressed markets, these are areas where you'll see an element of consistency, an area where it's pretty plateaued. We look at an area like London. There's a lot of really good opportunities in London right now where we can see the market starting to plateau out and there's deals to be made. So even within that, that comes back to that position of achieving equity day one that we can provide here for you to get you early access into properties to then actually start achieving that. The key within that is actually analyzing the right locations. So we look at researching macroeconomic opportunities to then analyze the microeconomic hotspots within those areas with that key goal, which is to achieve growth and value for clients. And whenever you speak to myself or one of my colleagues here, you'll hear a lot of emphasis on the idea of value. It's not always about getting the cheapest property, but getting the property that has the best value in that market to achieve the rental return, to achieve the growth, and all in all to then start to push your portfolio in the right direction. And again, if you want any more information about locations and areas, it's not a 15-minute conversation. It's going to be a long pulled out meeting with us here to really analyze the right kind of location for you. And again, at the end, you can book in for a meeting with us and go through that in a bit more detail. Now, just to give everyone, as I'm sure everyone's come along today and wanted a bit of an idea of what sort of properties can we get and what sort of things do we work with, I'll go through a very quick couple of examples just to show you. So you'll notice on the first section here, we deal with that market of hassle-free new build and off-plan property. Now, one thing we really emphasize here at GetGround, and you'll see it all over if you've had access to our portal or been on our website, the due diligence and the analysis we do in the background here to ensure the properties that we're working with are with reputable developers, really good agents, developers that provide their properties on time to a really good standard. And again, we're getting into the right locations. And actually what we're doing with these new build and off-plan properties is getting what the benefit is meant to be from them, which is key targeted markets, early access routes in, and a good position to get in before the market's really starting to blow up. So you can get in at a really competitive price to get a really good kickstart within that. What we can then also look at is secondary properties. And what you'll notice here, again, it's not a one type of property we work with. We're looking at key locations with properties starting from, well, prices starting from around £100,000, pushing all the way up to, as you'll see there, a property of £1.2 million. We have portfolios of properties we can look at up to values of £6-7 million that are all providing strong returns. And again, emphasizing that fact, we want to find the right property in the right area with that key element, which is the value in that area, to achieve strong yield, good return, and a reputable investment that we can continue to work on and grow with your portfolio. And lastly, touching back onto what Eric initially started talking about, is our ability here. We can purchase shares of companies with tenanted properties. So we've had a number of investors now who have bought properties already set up in GetGround companies and paid a fraction of the stamp duty. So rather than paying 3%, 5%, in some cases, we're talking 7.5 upwards percent on expensive property, they're paying 0.5% for the purchase. And what we can actually provide with this is the ability to buy these properties, get good quality lending on them, and then you have a full reputable investment. You can see the full background, have all the knowledge about how it's been working, how it's been growing over the last few years, what the tenancy's been like, and get that full all-round idea of the property before making any decisions. Lastly with that, again, on the flip side, if you have a property within that as well, and you're looking to actually sell your property and sell your property through the company model, again, get in touch. We can also assist and help out with that. So that's a bit of a touch there in terms of the properties we work with. What we'll make sure we then do is do a full analyzed breakdown with you in terms of the financials behind the property. This is one page of a 3-page document about the full runnings and workings of an investment property that we can run through with you. And what you'll be able to see is, what am I putting in? What am I getting out? How do the returns work? What's my timeframes? How do I pull money out? A full round investment plan for any property we look at. And that is every single deal we look at. We can put one of these together for you. And again, get in touch and we'll get these all together for you. If you want to go through these in more detail, again, book in a meeting and we'll take you all one by one through this cash flow. And what I'll do now is I'll pass you on to the last speaker of the day, who's Andrew, who's worked on our GetGround mortgage side, and he'll take over from there.
Thanks very much there, Scott. So yeah, thank you all for joining the call today. I'm going to talk you through GetGround Mortgage in a little bit detail today. Just to let you know as well, do feel free to post in the Q&A. So there's a Q&A section down the bottom of the page. What you can do there is you can post your question, and when we get to the end of the slides today, we will talk through a few of those questions and try and identify some of the most commonly asked questions as we go. So as you can see here on the slide in front of me, we've got just an intro to GetGround Mortgage. We can finance your next UK property investment seamlessly with access to competitive rates and in record time. And you can see on the right-hand side there is this little calculator, which you can use on our website. So the calculator is linked to real-time rates so that you can have a look at what rates are available in the market. And there's also links on there where you can book in directly into one of the mortgage team's diaries as well. So in terms of how GetGround Mortgage actually works, it's a very simple, hassle-free process. What we would be looking to do is have a call where you simply tell us what you need. Okay, so it's what we call a fact find. It takes roughly 30 minutes to an hour. And what we'll do is we'll go through your financial situation. We'll have a look at the property that you're looking to buy or remortgage. We'll have a look at what your mortgage preferences are, whether that be to go for something fixed long-term or maybe a variable shorter-term mortgage. And then what we'll do is we will send you a link to upload a few of your documents. Once you've got your documents ready, we'll take care of the rest. So what we would do is we'd search through the whole of the market for you to identify suitable mortgage products for you. And we usually send you sort of 2 or 3 different deals for you to have a look at, and then you can make a decision on which one is right for yourself. And then we obviously apply to the lender for you. The lender will obviously underwrite the case to make sure they're comfortable with it. They'll do a valuation on the property, and then they'll issue you a mortgage offer. It's at that point that obviously your solicitors could step in and make sure that it goes through to completion through all the legal processes. So quite an easy, hassle-free process there. Okay, and if our mortgage is not for you, then we do have a number of broker partners as well. Okay, so we have broker partners LDN and Knight Frank. Okay, now we do specialize in limited company buy-to-let mortgages. We can also assist with some personal name buy-to-let mortgages as well. However, we do have partners available that can help with residential mortgages, bridging loans, and many different other types of mortgages as well. If you want to look at, say, a commercial property, so we do have options available to all of our clients. Okay, so today I'm going to talk a little bit as well about the exclusive launch that we have, which is the share mortgage product. As we've mentioned throughout this presentation so far, there is the option to buy the limited company as opposed to buying the actual property itself. And so it would only make sense to have some kind of financing in place to be able to achieve that goal. So what I'm going to do is talk you through a product that we've just launched. It's completely exclusive to GetGround. And it's really competitive, and it's available to a lot of different clientele. Okay, so I'm going to talk you a little bit through what the rates might look like for you, and also what types of criteria there are as well. Okay, so share mortgage products. So the criteria for this is that the SPV must be UK domiciled. On this one, and whether or not you're a UK based investor, a UK living abroad, or a non-resident completely, we can look at options for you on this mortgage product. UK expats up to 80% loan to value, and non-residents up to 75% loan to value as well, which is really competitive. Obviously, what will come into it is the stress tests around how the mortgage is assessed to work out exactly what you're eligible for based on the investment that you're trying to buy. Okay, so we've got finance for the purchase of SPV owning UK property up 75 to 80% inclusive of the fees. No local UK account is required. Okay, and you can save on interest with a savings booster that's linked to that product. Okay, a wide range of acceptable countries. Okay, so the great thing about this product is that if you're UK based or in Hong Kong, Singapore, or a number of other countries, you may be able to benefit from this product. And one of the other benefits is that there's no early repayment charges for the variable products in the deal. Okay, so actually, if you were looking at making some large overpayments to clear the mortgage down faster, things like that, you might benefit from having a product with no early repayment charges on there. The other benefit is that first-time buyers, first-time landlords, and portfolio landlords are accepted. So notoriously, it's actually quite hard for a first-time buyer, first-time landlord to achieve a buy-to-let property, especially if they're based overseas. So this might be an option for those people who are looking to get into the market, and it might be a competitive way of them doing that, especially with the saving to the stamp duty by buying the company itself. So what can you expect from the rates? So we've got expat rates starting from 6.59 on the tracker and 5.65 on the fixed rate. Fees are around 4.25% on the tracker, 5.25% on the fixed rate. And for non-residents, very competitive fees there, ranging from sort of 7.49 up to 8.49, with fees starting as low as 2.75, which I'm sure you'll agree in the current market today is actually a pretty low fee. So the different acceptable properties that you might want to look at for this kind of transaction. So properties are accepted in England or Wales. As you can see on the screen there, East Anglia, East Midlands, London, North, Northwest, Southeast, Southwest, Wales, West Midlands, Yorkshire and Humberside, all accepted on this type of mortgage product. So no real restrictions there as to where you're looking to buy. The only thing that we've not got at the moment is Scotland. That's because it's a completely different process when purchasing a property in Scotland, you see. Holiday lets and Airbnbs are accepted. Studio apartments of over 30 square meters with separate bathrooms are accepted. Multi-unit freehold blocks, HMOs, corporate lets, investment-led and new build, all accepted there. So typically speaking, when you're trying to mortgage a property, the trickier mortgages, tend to be on properties that are let where the development is investor-led, or if it's maybe a multi-unit freehold or an HMO, especially if the client hasn't got loads of experience with buy-to-let mortgages as of yet. So this is really, really competitive criteria. And especially, I think it's really one for those who are maybe first-time buyers, first-time landlords. Okay, so what I'm going to do now is I'm going to hand back over to Connor. Just before I go, just another mention about that Q&A there. Do feel free to pop as many questions as you can in there, and we'll answer as many as we possibly can for you. And thank you very much for listening to the section about mortgages today.
Thanks, Andrew. So just before we get on to the Q&A, if you will be interested in reaching out and speaking to any of us here at GetGround, you have 3 QR codes there in front of you, as you'll see on the screen. So you can book in a call with Anna Maria if you want to discuss our company product about structuring and managing your UK buy-to-let property. You can book in a call with Cecilia if you want to discuss buying a new property or actually selling your existing property through our platform. So purchasing or selling a UK buy-to-let property. And lastly, you can book in there with Jaden if you want to discuss mortgage options or financing your UK buy-to-let. So please do feel free to, as I said, use the QR code and book in, and we'll be in touch in a short period of time. Now I'm gonna move on now to the Q&As. We've had heaps of questions come in, so thank you very much for them. I'm going to rattle off a couple really quickly. So are you an investment focused company, or are you also an estate agent? So we only facilitate property investors, and we don't facilitate owner occupiers. That's for all of our products. So we only facilitate investors as opposed to owner occupiers. Can overseas investors be a company director? Yes, absolutely. However, each shareholder and director in a GetGround company will need to go through AML and KYC. They'll have to onboard. But yes, absolutely. So what if I have my limited company already set up? Do you provide your services? Yes, this is a new product that we're offering. It's in its pilot stage now. We're going to be launching it in Q1 of next year, where we are onboarding existing limited companies. So as I said, please book in a call there with Anna Maria, and we can discuss your existing limited company and whether or not we can help you out and service it. So hi, I have 8 properties as a private individual. Is there a mechanism where I can incorporate without having to pay SDLT and CGT? So no, not necessarily. You will still need to pay CGT and SDLT. So what this person is asking is can I, as an individual that owns property in my personal name, can I transfer that over into a limited company structure? So yes, absolutely you can. However, you will bear cost. So you as the individual will have to pay capital gains tax, and then the limited company that you've set up will have to pay stamp duty land tax. However, there are ways in which we can, utilize the equity in your existing property to cover some of the capital gains cost. And it is something that we are working on currently, and we are able to service clients that are looking to transfer. And we basically run through the numbers and make and check and see if it works for you as an individual. So again, if that person that asked that question wants to reach out as well, we can of course set up a consultation to discuss. Okay, so I'm going to now start going to Andrew, Scott, and to Eric. Perfect. Okay, so again, this is one I can probably, can you help with opening bank account for overseas investors? So you open up business accounts that are business accounts tied to our limited company. So again, we'll have to set up a limited company for you. We'll have to go through the onboarding process, and then we will set up a business account to manage all your property expenses as well with that. We don't set up standalone bank accounts for UK or for non-UK. It's tied to the limited company. But again, please do reach out and we can discuss this with you. Andrew, here's one for you. So which banks are overseas? Oh, sorry, let's just move. Overseas investor friendly.
So we've actually got a number of banks that are comfortable, banks and building societies actually. So what we would say is it's always best to get booked in for a chat to discuss your actual personal circumstances, because although the likes of HTB, Skipton, Octopus, Oak North, and many others can offer mortgages to overseas investors, they do have other criteria that's worth talking through just to make sure you meet those criteria. And they don't all share the same list of countries that they lend to. Okay, so there are some countries that are a bit more high risk and some which are a lower risk. And so it very much depends on where you're living at the moment and also the other criteria around the case. So do feel free to get booked in and we can go through it in a bit more and we can actually tailor it to your circumstances there.
Super. Another one for you, Andrew. So when we do buy to let, so when you purchase a buy to let that is a newly built flat, and what's the usual amount for a mortgage? So what would you have to put down? 75%, 65%, or lower?
So for a new build property, there are some lenders there that will restrict the amount of borrowing you can get against it. Generally speaking, the industry standard 25% deposit is sufficient for most new build flats. If your case is a little bit quirkier, so for example, if you're living overseas or if there's no other background income, things like that, you may be restricted to say 65% loan to value, which is 35% down. But I would say generally speaking, industry standard 25% deposit.
Eric, here is one for you. So if you have set up a limited company for a property that you are purchasing, then for unforeseen circumstances, you need to pull out. Can the limited company be updated with new property details, or would I have to start from scratch?
Sure. So thanks, Sherry, for that question. Just to confirm, so if you've already set up a limited company via our platform, and like you say, you intend to go ahead with the property purchase, but for some reason that may fall through, no, you absolutely don't need to close down the company and set up a new one. What you could do is very easily go in via the platform, update the relevant details around the property, and continue with the company structure that you've already set up. So no, you'd absolutely be able to use the same one.
Just to confirm, that is prior to completion of that property. Is it complete?
Yes.
Yeah.
Sorry, just to confirm, that is as long as it's prior to completion of the property. After completion, obviously, it becomes slightly more complicated, but prior to completion, you can absolutely do that.
So Eric, there's another one for you. So I have one GG company now. Is there any attractive discount for me to set up another one?
Sure. So like I touched on, we do have the waive discount on the setup fee. That is typically when you get to the third company, just because obviously there are costs involved when we're setting up the infrastructure, not only on the company side and liaising with company's house, but also with our account provider and providing the legal services there as well. So you do have to get to that third point, so that third company. But of course, when you're scaling past that point, then it is entirely free to set up any additional company. So when you start thinking about cost-effective processes and economies of scale, we really offer that here when you look for future investments.
Another one for you, Eric, and then I'm going to go down to a couple more of the property and mortgage questions. If you buy a property with your limited company from another limited company, do you still have to pay stamp duty? So I think what this person's asking is if you buy the asset out of that company into your company.
Sure. So if the company is selling the property out of its structure and you're buying that property specifically, then you are still liable to pay the regular stamp duty land tax. The reason being because under the scenario I explained, you are actually selling the whole company structure and the property is simply held within its assets. But if the property is actually being sold out of the company, then the buyer is buying the property directly and the normal stamp duty land tax rate is applicable there.
So there's just a couple here. Sorry, I'll get to the property and mortgages once. There's some really good questions around limited company structure. So you say you can set up a company for UK properties. I have a property in Northern Ireland as well as England. Are you able to cater for Northern Ireland now, as well as when I asked last, you were not able to? Eric, over to you.
Sure. So to my knowledge, currently we don't serve any companies in Northern Ireland. Obviously, the vision for us is that we want to go to the entire UK market as a whole and then potentially expand past that point as well. There are some differences between legalities. So for example, we don't currently serve the Jersey area because there are a few slight differences there. However, that's not to say in the future, we're not going to be looking to expand into those markets. So that's hopefully going to be the case in the next year, the next coming years. But at this current point in time, unfortunately not.
Another one, is it worth moving property that is in your personal name to your company, as it seems very expensive, i.e. pay stamp duty again? So yes, in some cases it does make sense. There are ways we can mitigate some of those taxes. We have calculators built internally here where we can run the numbers from the purchase value of your property, the existing property value in terms of the market value of it, if there's LTV left, and a few other bits and pieces, and we can figure out whether or not it makes sense for you. So yes, in some cases it does actually make sense. So I'm just going to keep scrolling down. Are there any issues with the buyer getting a mortgage if they are buying shares in a company? Andrew.
Okay, so yeah, I mean, up until very recently, there wasn't really many options if you're looking to do a share mortgage, whereas actually now, thanks to our exclusive product that we've got through Molo, which I mentioned in the presentation today, we can definitely help with buying shares rather than buying the property. So yeah, definitely something we can help with. And yeah, if you have got any questions about that, do get booked in, because we've had a few people already sign up and start going through the process on that. We want to try and make that more of a normal thing now, because there's such great tax benefits and things to be had from going down that route.
So buy-to-let property via company, mortgage rate will be higher than personal buy-to-let. So yeah, to yourself, Andrew. So I think what this person's asking, will the rate be higher if you buy buy-to-let through a company as if they were to a personal name?
Yeah, so we get this question actually quite a lot. It is ever so slightly higher to buy through to have a mortgage on a limited company as opposed to a personal name. That being said, it's only usually about 0.5% difference depending on the scenario. And actually the amount that you can offset for tax purposes far outweighs the slightly higher rate. So to be honest with you, it's usually still more cost effective to go down the route of the limited company, even though the rate is slightly higher than the personal, just because of the tax benefits.
Yeah, just to add to that, so as Eric would have said, so you can actually deduct your mortgage interest from your tax bill as well as any other business expense. So your service charge, your ground rent, your management, your maintenance, any business expense as well as your mortgage interest can be deducted from your tax bill. So even if you're paying a slightly higher interest rate, for the most part, it's going to be more advantageous to do it via company structure. So here is one. If I find a property myself, can I engage GetGround to open up a company and invest in that property? Absolutely. Our kind of original or our core product was the limited company product. So for maybe the first 4 years, all we did was set up limited companies. So we can facilitate any investor that is looking to purchase a property, and we can set up and structure that company for you, no problem. Please get in touch. Are these properties, Scott, this for you, are these properties only exclusive to you guys, and can't be found at other estate agents? If yes, how and why? Not sure if that's possible to keep it exclusive.
Yeah, so to be honest with you, it comes back to that depending factor on the properties of the value that we see behind a deal. You know, we're not ones to turn down an opportunity that we can see cash flows effectively and works really well if it's on the open market. That being said, yes, we do have opportunities here that are completely exclusively with GetGround as opportunities. Particularly, as I mentioned, we have a number of opportunities again across the board, as we've said, that we really have the only solutions for in terms of the ability to purchase these certain properties that are set up in companies already, and people looking to do share transfers on property, and even a number of private sellers who have contacted us directly to sell their property. So we have a number of certainly second-hand properties, I would say, that we have exclusivity on. And then on other sides, again, it just very much depends on when we take on a deal and if it passes our due diligence checks in the first place, so we even think about taking on a property.
Coming back to you again, Scott. So is this the right time for buying property? Seems prices are going down. Is that true?
Look, I think it's one of those things. And if I had £1 every time that I spoke to someone over the last 5 years saying that property prices are going to drop, you know, I've had investors throughout the times of Brexit conversations, COVID conversations, the Brexit vote, when it actually then happened, and saying, you know what, I'm going to hold off and I'm going to wait, and I'm going to wait to buy a property. And I think, you know, it's one of the older sayings across property investment that I think most people at some point will be told, which is, it's not so much about timing the market, but more about time in the market. Realistically speaking, the longer that you're invested, the more return you're going to make. And the key factor within that, and we'll go through this a lot more when it comes to the strategy planning, is if you bought a property today and it decreased by 5 grand, 10 grand, even 20 grand over the next, say, 6 months, and you don't sell that property, well, realistically, what have you lost? You haven't sold the asset. The key idea of property as an investment platform is that we're not here to make a quick buck. It's not a get rich quick scheme. It's a strategized plan for a long-term ability of capital growth and rental return. If you bought a property and it decreased in value, you simply hold on to it until the natural trend, as we all know, continues to go back to where it was and then continues to exceed. You know, there's a reason being that lenders on property, particularly on investments, ask for that deposit range of, say, 25 to 30%. And that's because property prices have never decreased by more than 20%. And they're not actually achieved where they already were. And then it works on a 10 time.
Perfect. Thanks, Scott. So, one for yourself, Andrew. Would you do a mortgage for a buy-to-let property that is not in a GetGround company?
Yes, absolutely. Yeah. So we can do mortgages for personal name held buy-to-lets. We can do mortgages for limited companies with GetGround and limited companies mortgages that are completely set up away from GetGround. That's no problem at all.
A couple other quick ones. Irish residency, will that be acceptable? Absolutely. Easy one for me to answer. Who can I reach for partnerships opportunities? Feel free to reach out to Anna Maria. I can help you out here, or pass it on to Nikita, who's based in the UK. We've got Bianca, who's based in Singapore, and also Florence, who's based out in Hong Kong. So just reach out to one of the QR codes and we can set you up with a call, no problem. So we have a question here, Andrew. I had inquired about a mortgage before, but the loan to value was extremely low. Has that changed with the new product?
Yeah, so we do have more offering now in terms of mortgages. If you applied previously, it may well have been that you applied when we only had a very reduced number of lenders that we use. Now we offer lending from a wide a wide panel of lenders. So we certainly have stuff all the way up to 80% at a real push. It will depend on the rental income that you're receiving from the property though. Okay, so it may well be that previously the loan to value was quite low on that because the rental income didn't quite allow for the stress test to work effectively and generate a large mortgage loan. But certainly, if you want to have a relook at it, we can get you booked in and we can have a look through your options that are available.
So do we have a contact in Hong Kong? Yes, we have an office in Hong Kong. Florence heads up the office out there. Again, reach out to one of the QR codes and we can set you up with a call, not a problem. Sorry I missed the start. Is there a recording available? There will be, absolutely. This is being recorded. So one for you, Eric, can you explain the differences between a holding company and subsidiary companies?
Yeah, absolutely. So the two different models we have are, in terms of the holding company, what we would do is we would set up a large umbrella company, which basically would hold all of the subsidiary companies within the holding company structure. And the subsidiary companies, those are the company structures that are actually going to be holding the independent properties. So it just means that we'll have one large overarching structure, and within that, there'll be subsidiary companies each holding a property. Now, that does mean that obviously these are all considered as one, they're all part of the same legal entity. So therefore, if you have multiple properties generating more income, it's all considered as the net profit for the holding company as a whole. So that's a consideration to make around the corporation tax and what might be payable. But primarily it's around setting up that umbrella company and then having those subsidiaries underneath holding the properties.
Thank you. There's another quick one here. So can buyers who want to buy to live buy? Unfortunately not. We only facilitate investors. How much is the mortgage broker fee?
So the mortgage broker fee that we charge at the moment is £349 if you're in the UK or £799 for clients overseas. And we charge a portion of this fee when you get your mortgage offer. So that's post-valuation, post-credit approval. And then we charge the remaining balance on completion. So there's no upfront costs at all on that one.
Super. I appreciate that there's heaps of questions coming in. If I haven't gotten to your question, please do book in a call and we can discuss it. I also just want to let everyone that's on the call know that we are going to be hosting an event in London in December. The provisional date, in January. The provisional date is the 13th of January. So we will notify everyone of this. We'll have a panel. We can have a discussion. We can meet everyone and discuss your different circumstances and scenarios and see how best we can help you out. So please keep an eye on our socials for this event. I think it'll be super. There's a couple of people raising their hand. I'm just conscious that we have only got 1 minute left. So just say again, thank you so much from everyone here at GetGround. I really, really appreciate everyone taking the time. If we have not answered your question, if you have any questions that you weren't able to ask, please do book in a call with one of the QR codes there. And again, just to reiterate, we will be hosting an event in January, provisionally the 13th of January. So please do all book in and come along. But that's it for me and the team. So thank you so much and look forward to seeing you all soon.